So, Bear, guess what's back by popular demand?
Let me think. Black lights?
No. Black lights? Where's that from?
Disco balls.
No.
Disco balls are back in demand.
No.
All right, I know. I got this. Bell bottoms.
No.
Come on.
Wake
Come on.
up.
I wore them today. Oh, they can't see them.
Buyer's advantage. 3% down and you can buy a house.
Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am Delynn Gaston. Thank you so much for joining us today. So, a couple of weeks ago, we had an extremely successful Lunch and Learn.
Yes, we did. And it's back by popular demand.
And it's back by popular demand.
Unlike the disco balls, unlike the bell bottoms, and unlike the black lights.
We've actually been having a lot of successful Lunch and Learns, haven't we?
Yes, we have.
You know, and so for those of you who have been to them, welcome.
Yeah.
Glad you're enjoying them, and please keep on coming because we're enjoying giving them.
Don't worry about your phone, Delynn. We're in the middle of taping the show.
Apparently, it's time to leave. That's what it's telling me.
Great.
Whoops, that was an alarm. Sorry about that.
No, that's all right.
But anyway, so.
All right, can we see if we can cut that out? No. This is what's beautiful about us.
This is what happens on live, sort of, ish TV.
You know we're real, we're human, and this is how we roll.
And our phones go off.
That's it. So anyway, about the lunch and
All right, so about the lunch, we've been having a lot of very successful Lunch and Learns, and we appreciate you guys coming, and it is open to anybody. It is free of charge. So those of you who haven't been to one of our Lunch and Learns, a quick plug here for our Lunch and Learn, please feel free to come. Reach out to us. It's all over Facebook usually. I email a bunch of people, but if you don't hear from me, shoot me an email. Hey, can I come to your Lunch and Learn? I get that from people all the time who I've never heard of. Yeah, come on over.
Yeah, well, remember, it's really not for anybody.
No.
It's for our real estate professionals.
Real estate partners only.
So all our plumbing and AC friends that we love you too, we're not buying you lunch that day, okay? It's different. It's just
Realtors.
It's for realtors.
That's what we're looking for. But anyway, so we had a Lunch and Learn that had Deanna Case from Radian Guarantee. Now, Radian Guarantee is a PMI company, private mortgage insurance.
Glenn, what is that?
Ew.
What is PMI?
I know. Okay, so here's what PMI is. Just give you a real rough overview. So PMI stands for private mortgage insurance. Anytime someone puts less than 20% down, it's a requirement. Fannie Mae, Freddie Mac, the conventional world requires you have insurance on the loan, and it's basically default insurance. If the borrower defaults on the loan, the lender doesn't take the whole hit themselves. The insurance company helps them out with a portion of it. That's what it is. It's basically insurance for the lender on the riskier loans that have less than 20% down. And it is a requirement nationwide. If you put less than 20% down, you have to have PMI.
Can I comment?
For the most part.
You called it a riskier loan. We don't want someone to be misled and think just because you didn't put 20% down that your loan is risky.
No, the lenders think it's a little riskier.
You don't have as much skin in the game.
There you go.
You know what? I want to compare it back, though. Do you remember the subprime days?
Yes.
Back in 05, 06, 07, 08, they went poof, you know.
Yep.
We used to do 100% with no MI.
I know.
Now, granted, you were paying 8 or 9%, or 10 or
for 2
whatever.
year.
Yeah, and then
it went to 11 or 12.
That was the minimum base, but how crazy was that? There was no MI.
I know.
They were self-insured. They were okay if you defaulted at that point.
Well, because the rate was so high.
Yeah, exactly.
So it made sense. But anyway, so the PMI, the private mortgage insurance, it is an insurance, and I know a lot of you realtors already know about what PMI is and how it works, and you always, everybody kind of cringes with it. But I got to tell you, some of the PMI companies, because for a while there, after the real estate crash, a lot of the lenders, they were requiring 20% down. They weren't even messing because they had lost their shirts with whether the loans had MI or not, they had lost their shirts. So they said, that's it, no more, 20% down, or we're not doing them. So if you didn't have 20% down, every lender out there was putting you into FHA. And this was probably, what, 2008, 2009?
Yep.
Even 2010, 2011. So it's not that many years ago. At least not to me. It's not that many years ago.
Feels like yesterday.
I know. But anyway, then the PMI companies started coming back into the arena to play ball again, and they're saying, well, wait a minute, okay, the market's stabilized, everything is a little, pretty good now. So the lenders are now doing, okay, well, we'll do maybe 10% down loans, and then they went to 5% down, and now
we have
dun,
a
dun, dun.
buyer's advantage program with only 3% down, and this is not FHA. So for all of you sellers, listing agents, buyer's agents that say, I don't want FHA, I'm not taking FHA, which
Right.
much of the market right now,
They're afraid of FHA.
they are afraid of
don't
it
know
for
why,
whatever
but they are.
reason.
Right.
Well, the big reason is flips. That's the one reason.
Right.
FHA is not flip friendly per
Right,
se.
right.
Roof requirements, certain parts in the inspection can fail an FHA
Right.
appraisal. So this is an alternative to the FHA with actually less money down.
Right.
0.5% less down.
It's only 3%
3%.
as opposed to FHA's 3.5%. So it's a great program. If you can qualify for it, it is a great program.
And so do you want to talk about nuts and bolts of it more and how, we can actually save people money because the MI insurance on this, I know
Right.
you were going to talk about the comparison.
Right. So just touching, and I know we're going to get into a lot more detail in a little bit, but just touching kind of lightly on, so with an FHA loan, or a conventional loan, the PMI or MI, mortgage insurance or private mortgage insurance, the key word here is insurance. And as with any insurance, it is going to renew every single year. So you have your first year's premium that they're going to charge you up front at the closing. They'll either roll it into the loan for you, or it's part of your closing costs that you have to come up with it, or it's rolled into the loan on a monthly basis. And sometimes both are done. There's an upfront premium as well as rolled into the loan on a monthly basis.
Like on an FHA loan.
Right.
FHA loans, a lot of people don't realize that there is a premium stacked on your loan.
Right.
It's not money you have to come up with, but it does add to your
Right.
payment. Okay?
And it's hefty.
Yes.
FHA sets that, by the way. That is government set, and that is nationwide. It doesn't make a difference of your credit score or anything else. That part of it is based on whatever the government says. This is what the premium is.
And on this Buyer's Advantage program, there is no upfront premium.
Right.
So what a big deal that is.
Right.
I mean, that's huge because that changes your payment right there. That's a huge advantage. It's a huge buyer's advantage, Lynn.
That's why it's called Buyer's Advantage.
Yes, yes. So
Boy, did they name this right.
they did. It's the perfect name. So anyway, you know what though?
What?
I want to get into so many key features
I know.
and benefits of this.
But you have to go and fluff your afro.
Yeah, I got to go change my bell bottoms first.
Do a little discoing.
I'm going to go disco under the ball, and I'm going to go model in front of the black light. But first, we'll be back right after this. Do I have any tan lines from the black light? Can you see?
From the black light. I know you're good.
How about my teeth?
You're
Are they
just
glowing?
shiny.
Have you ever seen, did you ever watch that
Stunning.
adventure of Friends when Ross got his teeth done and he's on a date and he's like, oh, and it, like he opened his mouth and it would glow.
That's funny. No, I don't
And he's
think
on
I
a
saw
date
that.
and he made the girl turn off the lights so she wouldn't see his teeth. Well, what he didn't know was she had a black light on, and when he opened his mouth, it was like.
So his whole mouth was gone.
Anyway, I know. It's so
Anyway,
important.
we digress.
It's so important
usual.
that people know what we really do in our real lives. So
He watches Friends reruns from over and
do.
over and over
I
again.
do. I've
I
seen
watch
every
Big Bang
episode.
Theory.
I do. Actually, 2.5 Men, Friends,
Oh, 2.5 Men. I love that show.
and Seinfeld.
Yeah.
Those three.
Kind of over him, but I do love 2.5 Men.
Yeah, because I've seen all the Friends, so now I'm going back to Seinfeld. They're on at the same time. Anyway, back to our 3% down
Now
program.
that you know our TV choices.
Yeah, it's
and of
important to
course,
know.
Walking Dead is up there on my list too.
No.
It's not his. All right. Anyway, so let's get back to PMI.
Yeah, we were
And
talking
actually,
about
it's
PMI.
the Buyer's Advantage
Buyer's
program.
Advantage program.
So don't be afraid of
3%,
PMI. Is
3%
basically.
down.
Yeah.
So let's talk about this program in a little more detail. So the first thing I think people should know is that even though it's a 3% down, it is a special buyer's program, but it's not just for first-time home buyers. Anybody can use this. And not only can you use it to purchase a home, but you can use it for what we call limited cash-out refinance.
Right.
So I think it's important they know that. So if you are looking, there could be a huge savings, huge, Gloria, huge, to doing this program over, FHA, because we like, FHA seems to be the easy route for a lot of people. So this is a conventional loan product. I might want to add that.
And the nice thing about this as well is it did used to be a first-time home buyer program, and it isn't anymore. In fact, you can even still own another home and under certain circumstances and get this 3% down program.
But this must be used for your primary residence.
Right. This one does have to be a primary residence.
But even though
So-
you can own other homes, you got to.
Right.
It's got to be on your primary. What are you doing? You getting a tweet?
I'm looking. No, I'm like. I'm
She
technical.
talks about me. Listen,
I'm technical.
Just for the
so I'm
record.
looking at-
my phone is right here, and I haven't touched it the entire show, except for now. And I didn't look at it.
That's because apparently I only made one of these, and he's using it. So
So I look smarter.
I took a picture so I could read some of the stuff
Yeah,
too.
so- and-
right, see, so like all the laundry's out right now.
All right, so
All right, some of the key points
that she's
to this
getting off
program.
her phone. She's looking at Facebook. Don't let her fool you.
The first one, of course, is it's not just for first-time home buyers. It is up to 97% primary residence only.
we already covered those.
But 105% CLTV. What that means is that you could have a second behind that, a second mortgage. In other words, down payment assistance programs. Many of you are familiar with some of the down payment assistance programs. Those are loans and those are liens on the property. It is in second position, so it's called a second mortgage on your property.
And there is,
And they do allow those with these programs.
right, and there is really, truly no minimum buyer contribution
Right.
required.
One of the things
It can
that-
be a gift
Right.
from a relative. Can't use a cousin though, can you? We found
No,
that
has
out.
to be a close relative, mom, dad, brother, sister, grandma, grandpa, something like
Fiancé
that.
works.
Fiance, stepchildren.
Yeah,
Or
ex-wife.
step-parents, even foster children.
Yeah, isn't that funny?
I don't know about ex-wife. I'm not sure about that. I'll get back to you.
All right. If you have one of those that's going to help you out, let me know. And we'll check it out for you, okay?
I don't know how much they'll want to help you out on that anyway.
And down payment assistance, we already got. And then, remember, this is a special program, so there are income limitations. But
Right.
here's a cool thing going on in Florida, right? We have these things, they're called hurricanes. Well,
And we had one called Irma.
yeah, do you guys remember Irma? Well, there's some advantages, believe it or not, to having Irma.
One. And this is
This
it.
is it. The income limitations right now, restrictions are lifted.
Right.
So I don't care what you make, call your lender, find out about this special program.
Right. Now, this is just for the Buyer's Advantage, and this is just through this Buyer's Advantage program. So with the down payment assistance program, the income limitations are not lifted.
No.
They didn't do it.
No, but if
it is
you-
just under this program.
Under this program.
Right.
So,
So just like the down payment assistance program, and any of you realtors who have had clients going through that, you know that there are income limitations, whether they're 80% of the adjusted median income in the area, or 100%, or very low income, or medium income, whatever it might be. This program, this Buyer's Advantage program, has income limitations as well. However, we just found out, because we are in a disaster-related area,
we found this out a while ago.
which the entire state, because it went right up the middle. So now we don't have any of those income restrictions, which is pretty nice. Now, that's not going to last forever, and we are going to go back to the income restrictions again. So if you have people, buy now.
Yep.
Buy now.
Yep, exactly. And then it's based on household income, or it's not based on household income, it's based on qualifying income, which means if you have other people in some programs, remember,
The
you got to
down payment
count.
assistance programs,
You
keep in
have-
mind, you have to count all the household income.
On this one, you don't.
Whether the person's on the loan or not. So if your
Yep.
mother's living with you and she's receiving Social Security, but she's not on the loan, down payment
Yep.
assistance program, we have to count her income. This we do not.
And non-occupying co-borrower income could be allowed to be part of this too.
How
to help you
cool is
qualify.
that one? Non-occupying co-borrower.
Yeah. So anyway.
That means somebody who's not living with you, mom or dad, want to co-sign for you, they're allowed on this program.
Just like FHA.
Just like FHA, right.
Yep, so it's
On
good.
Regular conventional loans, it's a little questionable, but
And we already talked about, maybe allowed to own other properties. The other thing is home education, just like down payment assistance always requires this. This one may or may not require
right.
it.
There's definitely a couple of little intricacies with the program,
Yep.
so it may or may not require that. And then the mortgage insurance, the PMI, it is based on credit score and how much the down payment is. Under this program, it's actually reduced. So we actually compared both a 3% down straight program and a 3% down Buyer's Advantage program. The mortgage insurance is less on this, so you put less down and your payment's lower.
Isn't that funny? It's got an
No.
actual
Came out with a lower payment.
lower payment because of reduced MI, and actually, in a lot of cases, not to get too technical, but there's adjustments for credit scores, et cetera. It's waived in this program, so your rate can actually be
Right.
lower.
Right.
How cool is that?
So we've compared it actually, the FHA, straight conventional, and the Buyer's Advantage program, and hands down every single time this program comes out the
So
best.
if you fit in this box, we're going to tell you how
Our
much.
Lunch and Learn Realtor partners loved this program, so we figured we'd share it with the rest of you as well.
And we're going to tell you how much you might be able to save right after this.
Hi, I'm Jerry from Hot Locks Hair Salon. We are conveniently located at 13414 US Highway 19 in Hudson. I've been a local hairstylist in our community for the last 34 years, 7 of which I was an educator. Our passion is the artistry of hair, and Hot Locks is here to help you achieve your perfect image. You can call us at 727-514-9978.
Hi, my name is Joe Stalteri. I'm one of the owners of Complete Care Systems. At Complete Care Systems, we do carpet cleaning, upholstery cleaning, tile and grout cleaning, tile and grout sealing, wood floor and laminate floor deep cleaning, as well as stripping and waxing of linoleum and vinyl floors, and a whole lot more. We also run daily deals and special, which you can find at CompleteCareSystems.com, or simply call Tricia up at 727-364-5158, and she'll answer all your questions and give you over the phone free estimates. Or she'll send me out to your home or office to give you an on-site free estimate. At Complete Care Systems, we don't cut corners.
We're back.
We're back. We're
So-
back with interesting news.
Yeah. We always have interesting news. All right, so
We think it's interesting
I know,
anyway.
they probably don't. Actually, you know what? We're all about saving you money. So right now,
Saving you money and educating you on what's out there and the new things that can help.
yes, and this is definitely, I got a little comparison sheet on someone buying a home,
Okay.
$300,000 home, comparative interest rates on how much their payments would be. And I thought it was pretty cool to compare because on an FHA loan, a $300,000 loan, purchase, of course, their loan amount would be $294,566 because remember, even though they're putting 3.5% down, the loan size is bigger because we have to put the upfront
Right. MI in there.
MI on top of it. So even though, so your upfront MI is $5,066. That's really,
Steep.
yes. And then your MI rate monthly is 0.85%, which is $203. That's a pretty hefty part of your payment. Even though your interest rate is the same, your totally monthly payment, now this is, just principal interest, and MI, of course, does not
Right.
include
Taxes or
and
insurance.
insurance, is $1,609. And to compare it with a buyer's advantage, your loan size is actually $291,
Okay.
okay? And you put down 3% on this
Instead of
transaction.
3.5.
Yep. So your base loan is $291. There is no upfront MI, which is huge. $5,000 savings right there.
Right there.
Your MI payment, instead of being $203, would be $153.
Wow, that's a huge difference.
And your total monthly payment would be $1,542 versus $1,609 on an FHA. So it's $67 a month difference
Savings
over 30 years.
by going with the Buyer's Advantage program instead of the FHA for someone who has just a small down payment. I think you guys out there, you realtors, you have people out there who only have small down payments.
Yes, yep,
I'm sure you do.
yeah. So it
So this could be a
could
great
be a good
program.
option, something to definitely check
And I
out.
did want to just touch as well.
Of course you did.
The seller can contribute towards closing costs
Yes.
on that program as well. Now that is a big difference on that as well. With FHA, seller can contribute up to 6%. On this, it's up to 3%.
And
So
of course, remember, MI can be canceled on a conventional loan.
yes, it
Big
can.
advantage once you hit 78% loan to value. So
Here's the other really cool thing that I love about
wait,
this program.
Wait, there's more.
There is. Okay, so here's the really cool thing that I love about this program. They have one of the PMI companies that we use to go through for this program. It's called Radian Guarantee. Those of you, like I said, who are at the Lunch and Learn, you met Deanna Case, who's our account representative. Anyway, Radian offers what's called a no-cost mortgage payment protection plan for involuntary unemployment on the 3% down program. So basically what that means, if someone buys under this program and has the Home Buyer Advantage program, down the road a piece, they become unemployed, get laid off from their job or whatever, they actually will pay for their mortgage payment
How cool is
up
that?
to 6 months consecutively, up to a benefit of $1,500. So
Per
how
month.
cool?
Per
How
month.
cool is that?
So my
Yes,
$300,000 house,
right?
they're not going to pay all that payment, but they're going to pay a big part of it.
$1,500 of it
Yeah, they'll be-
per month for
yeah.
up to 6 months. Nobody is doing that. Nobody
And
is
it's
doing
free.
that.
It's
and it's free. It
included.
doesn't cost. And there's no hidden charge on the
No.
on the CD or anything.
It's
It's
in
free.
there. That's pretty
The total
cool.
protection overall is $9,000 during the period, and the coverage is for the first 2 years, and it starts on the closing date. So
So someone that's on the fence of buying a home or not, because they're uncertain of their job situation, may want to look at that because they're like, well, you know what? If I do lose my job, it's okay.
well,
This
within
program-
6 months, you're probably going to get another job.
Yeah,
and
you're
this will
gonna-
cover you for that 6 months.
This is going to cover your mortgage payment. Pretty cool.
I know. I don't know any. None of the other MI companies are doing anything like that.
I
so.
like it.
I love it.
I like it a lot.
What else do they have? Do we have time? So
No.
the other thing that they have, we don't have time. Are we out of time already?
Go ahead.
Who knows? All right. So the other thing that they have that I really like about Radian is they have something called a single premium, different from the 3% down program. But if you do have somebody who has less than 20% down, maybe they have 5% down or 10% down, they have something called a single premium so that they don't have monthly mortgage insurance. Marians. It's just a one-time shot, a single premium, and it can either be financed in on certain under certain circumstances, right on top like the FHA is, or it can be paid by seller contributions, lender contributions, something like that. So it could be a one-shot deal. So if we have somebody with a tight debt ratio, guess what I'm going to look at?
Yeah, so their payment will be lower overall for the 30-year period
Right.
for the life of
And
the
they're
loan.
not paying the mortgage insurance over the
Pretty
years.
cool.
Yeah.
Pretty cool. Some good stuff. So, you know what? Reach out to your lender, find out if you can get that buyer's advantage program.
If you can't, we've got it.
Yeah. So,
Shameless plug.
all right,
we've
what's
got
going
it.
on, what's going on in the community, Lynn?
Okay, so community events. As you know, we always have stuff going on. So first and foremost, I would like to say honorary governor race.
Sure, you
Can I
can
do
talk
that?
about the honorary governor race.
We will do that first. So West Pasco Chamber of Commerce has an honorary governor race every year, and it is a fundraiser for the West Pasco Chamber of Commerce. And there are 3 candidates, one of which happens to be near and dear to my heart. It is my wonderful, loving husband, John Gaston, and our producer of the show. He is running one of the candidates for honorary governor. His how it works is every vote is $1, so it costs $1 to vote. Please vote often and as much as you would like.
It's free.
50% of the
For
proceeds
$1.
go to free for $1. 50% of the proceeds go to the West Pasco Chamber of Commerce, and 50% go to a charity of his choice. And his charity of choice is Pepin Academies, which is a school here locally in Newport Richey for children with learning disabilities.
Pretty cool.
So, yay! Please vote. If you can go to WeBeam TV. And under that tab, look for Governor Race, and that's where you will find where you can donate. Thank you for your donations.
Oh, pretty cool.
What else you got going on?
So real quick, because we got to wrap up, we're running out of time. WPBA.biz, go on the website, check it out. Lightning Bus Trip, April 6th going on. I think it's pretty well
Only a
sold
few
out,
seats left.
but you might check it out, go online, see if it's still there. We also have a dodgeball tournament coming up in June. You might want to check that out.
And gather your team together.
And guess what? I'm going to be arrested. Did you hear about that?
It's going to be, no, I didn't.
Okay, so I'm doing.
Does that
yeah.
mean the whole like office work falls on me?
Yeah.
Yeah, basically.
So I'm going to be arrested.
You're going to be in jail.
I'll be in jail. I got to get bailed out. It's for wheelchairs for kids.
Wheelchairs for Kids.
Yeah,
Another
so-
wonderful, wonderful charity to give
so
to.
it's good. I'll be locked up, so I expect you to
So
bail
are
me
we
out.
paying money to get you out or keep you in?
Depends on which way we'll raise the most money. You know me. Anyway, get us out on social media. Share us, like us. We're on Facebook, Twitter, LinkedIn, Instagram, all those platforms. Thanks for watching us this week.
Thanks for watching, everyone. We are today and every day.
Moving forward, we'll see you next
everybody
week.
next week. Bye-bye.